Hi friends, very good morning. In today's video, I'll be talking about the capital gain tax changes as proposed in the budget speech by the Finance Minister on 23rd July 2024. But before that, please go through the disclaimer at the end of this video. And also, please note that I am not a tax consultant. You need to consult your tax advisors or chartered accountants before making any kind of investments and tax decisions. So information is purely for educational purpose. I will not be liable for any loss on account of the information shared. And also the understanding may or may not be correct. This is my interpretation. So you need to double check everything before you take any call. Now, okay, so there are a lot of things which have been done in this capital gains things. So you need to understand firstly key pointers. One is long term, one is short term. Number two is the fact, the duration or the period of investment which has changed or may have changed. And overall, the date is important. That means 23rd July onwards, because the old rates may be applicable from the previous, that means till 22nd, the old system may continue from 1st of April till that, and after that, that means 23rd onwards, the new things may be applicable. So coming directly to the topic, what really has changed? Okay, firstly, let's understand they have introduced, or this was an old thing only, listed Indian securities. Now, listed Indian securities, how the taxation will happen or is proposed to happen. Number one, all is already happening in some cases. So they've, kind of kept a couple of things in mind. Indian equities were earlier also, to the best of my knowledge, long term used to be more than 12 months holding period. So that the rate has increased from 10% in equity shares securities to 12.5%. And short term rate, which was earlier 15%, which was less than 1 year, is now 20%. So more than 1 year, 12.5%, and less than 1 year is 20%. So this is one. Then offshore equity shares, they have the holding period now stands at more than 24 months. So their long-term rate is 12.5% and short-term rate is 20%. For sale of bonds, which are listed, as I've said, debentures, zero coupon bonds, it is more than 12 months, 12.5%, and less than that, obviously the maximum or the slab rate which is there for the individual. For market linked debentures, there is currently no rebate in terms the holding period, whatever it be, you will always be taxed as per your slab rate, be it long term, be it short term. For REITs, that means real estate investment trust, invest REITs, invest IT, sorry, more than 12 months is the holding period. Long term rate is 12.5% and short term rate is 20%. Now coming to unlisted Indian securities. So that means shares which are not listed securities. The period is 24 months. More than 24 months, sorry, means long term. So anything above 2 years would mean 12.5%. Slab rates would apply for less than that period. Transfer maturity of bonds, debentures. So there was earlier also for this category, no such holding period, everything as per your slab rate. For REITs, invest REITs which are unlisted, more than 24 months, 12.5%, and less than that, short term rate. For other asset classes like real estate, earlier, to the best of my knowledge, it used to be 3 years. Now they've made it 2 years. And that means more than 2 years, real estate 12.5%. Now, before I complete anything further, the point is they have removed indexation. which is very important, which I forgot to tell. Earlier, you used to get a benefit of indexation in any asset class wherever it was earlier applicable. By any means, wherever it was applicable earlier. Now they've removed that indexation. So now flat long-term rate would mean be 12.5% would be your rate. Earlier it used to be like 20% with indexation. No, that is not available. Indexation benefit has been withdrawn. Doesn't proposed. Other asset classes, as I was completing this, would also include gold, artwork, other foreign assets, international funds, VCCs. So again, holding period more than 24 months, 12.5%. And before that, less than that is short term, which is your slab rate. Now coming to mutual funds, you need to understand, as I said, that earlier thing, equity oriented mutual funds, the same thing which is there. More than 12 months, long term 12.5, and less than that period, 20%. Now coming to debt category, which includes if you have more than 65% debt. So what happens is you need to understand, if you have acquired any of these prior to 1st April 2023 and sold them between 1st April 2024 and 22nd July 2024, the 36 months same thing remains. Holding period more than 36 months, you get 20% long term, and before that the normal slab rate for short term. If you have sold it on or after 23rd July, you get more than 2 years as your long term period, 12.5%, and before that the normal slab rate. And if you have acquired post 1st April and sold on any date, there is no such benefit of period. Everything will be taxed as per your slab rate. This is for debt mutual funds where more than 65% is debt. Now there was another category between 35 to 65. That means more than 35% is into equity and less than 65%. So that band of equity holding would qualify as a kind of hybrid mutual fund. Here, if you have sold between, again, this is the understanding which is there, which needs to be again revalidated, sold between 1st April 2024 and 22nd July 2024. That means more than 3 years, you would get 20% with a 20% tax as long term, and before that, the slab rate. And you have sold from 23rd July onwards, it will be more than 2 years. You will be a holding period, flat 12.5% long term, and before that, your normal slab rate. Now, coming to the last part, which again, uh, if let's say there are certain mutual funds which are gold funds, silver funds, international equity funds, debt fund of funds. So there again also this thing needs to be understood. If you have acquired prior to 1st April 2023 and sold between 1st April 2024 and 22nd July 2024, more than 3 years would be the period for understanding this as your long term 20%, and before that your slab rate. Sold from 23rd July onwards, more than 24 months will be your long term period, 12.5% would be your rate, and before that the slab rate. Now, if you have acquired these things post 1st April 2023, so that means after 1st April 2023, that means sold between 1st April 2024 and 22nd July 2024, nothing you have to pay tax, no holding period thing, everything as per tax rate. If you have sold between 23rd July 2024 and 31st March 2025, again you have to pay as per your tax slab, whatever it is. But if you have sold after 1st April 2025, you would most likely get 24%, sorry, more than 24 months holding period. That means you would get 12.5% long term, and before that you would get short term rate. I'm sure I've given you too much information, but if you keep watching my video again and slowly understand what I've tried to share with you, you would get a gist that these things are the new changes which I proposed. Thank you very much for this video, and now kindly go through the disclaimer. Number one is this is purely a free educational video for purpose of learning and viewer education only. This should not be considered as any kind of advice or for a promotion to sell anything. Information here is purely for the purpose of understanding only and nothing more than that. Investor education. Investments are subject to market risk. Past returns are no guarantee of future. There is no guarantee of accuracy of fact stated. Viewers must do their own due diligence. I will not be responsible for any kind of financial loss or account of this video. Viewers must consult their own tax expert, chartered accountant for any kind of things for future. This is just for understanding and my interpretation of the thing. Thank you very much and take care. Bye.